Well, thank you very much. It's good to be back at the Mining Journal Select after a hiatus of a few years. I'm presenting Marimaca Copper. We're listed on the TSX. As a high level, we're developing the Marimaca Oxide Copper Project in northern Chile in the Antofagasta region. I think I want to take a slightly different approach to this presentation and focus really on why I'm so excited about the copper thematic that we're facing in the next 5 to 10 years, and then go on to why Marimaca is really uniquely positioned to take advantage of that. So when I think about commodity cycles and commodity bull markets, I think about infrastructure-led demand cycles. And there have been numerous examples in the history, but I'm going to focus in on two at a very high level. The first, if anyone remembers, as a history buff, FDR and the New Deal, where he brought the US out of recession and the Great Depression by government-led infrastructure spending. And then the second, and much more obvious, which is much more firm in our memories, is the Great Transition of China. Both of them infrastructure-led demand, and we know exactly what occurred in terms of commodity demand and commodity prices. So this time, it's slightly different. This time, it's a global phenomenon. So the energy transition is occurring in multiple economies at the same time, and the government-led policy mandates are very much driving the demand cycle of this. I think what's startling for me about this slide is just the uptick in investment since 2019. We've got a 30% compound annual growth rate since 2019, focused primarily on the transmission grid. And that is really where my excitement about the potential for growth in copper demand comes from over the next 5 to 10 years. China is once again the leader in this, and I think our friends were discussing China being far ahead of the rest of the world in terms of their vision as to what the future is going to hold. They've spent an extraordinary amount of money on expanding their transmission and distribution infrastructure, and they continue to set remarkable records in terms of the amount of money they're spending on renewable energy generation. The US is not far behind, but what's really interesting here is the next 8 are spending almost no money on their transmission and distribution infrastructure. In order to have this electrification of the economy, all of these ageing pieces of infrastructure are going to need to be upgraded. And I know we hear a lot of people talking about this, but this is just a few sort of snapshots of the various electricity grids. In the US, 70% of the electricity grid is over 25 years old. If you look at Europe, about 30% of it is over 40 years old, and in the UK, about 60%, well, the average age of transformers on the transmission grid is 64 years old against an average expected life of 20 years. What we know is as the demand grows exponentially, all of this is going to need to be upgraded. So how much are they going to need to invest? Well, it peaks, according to S&P, at about $750 billion in 2040. Now, that is an enormous amount of investment, which is only just starting to come through, and we're already seeing that demand, particularly out of China, which has got well-documented woes in terms of its property. So why is that important for copper? Well, these are some facts and figures coming out of S&P. In terms of the transmission, the regional transmission infrastructure, it demands a relatively high amount of copper per kilo, per megawatt, per kilometre of transmission infrastructure. The further localised that distribution infrastructure goes, the more copper it demands in order to achieve the distribution aspects. So it's estimated that in the next 25 years, we are going to need to mine more copper than has been mined in human history in order to achieve these objectives. To put that into context, it's about 400 million tonnes of additional copper by 2050, not even taking into account the usual demands for copper, which is very much the old Dr. Copper economy. Offshore wind and all of the renewable energies are also enormous demand drivers for copper demand over the next little while. And this is where it gets really exciting, but it's really a 5 to 10 or maybe 15-year cycle for me as all of this infrastructure-led investment comes through. And we're expecting to see the biggest uptick in demand and certainly an underpinning of the future for demand in copper over the next 5 to 10 years as the government policies catch up with their mandates in terms of getting to net zero. So it's a very exciting demand story, but that's really only part of it from my perspective. The second part is really supplying copper is the greatest risk. There are numerous projects in the pipeline, but it is very much dominated by mega projects, which carry an exponential increase in risk by their very nature, being very large projects, often in very remote locations. A couple of examples. I'm not aiming to throw mud at the developers of these projects because they are very complicated, large-scale industrial projects. But QB2, as an example, more than 100% over budget, costing the company that built it more than $4 billion additional. That has caused a lot of CEOs who have development projects to be gun-shy in terms of their willingness to green-light these large-scale projects, which are required to meet that demand if we're actually going to achieve it. The second aspect, which our colleagues previously were touching on in terms of ESG, is it is becoming more and more difficult to permit mines. And there are several examples of large-scale copper mines, including the largest single deposit of copper in Pebble, which have run into significant permitting issues and been delayed extensively. There was a comment by the CEO of Glencore saying that in order to greenlight some of these large-scale projects, they would need to see at least $15,000 a tonne as an incentive price, which is obviously quite a bit ahead of where we are. So what about if all the pipeline were greenlighted and all of the CEOs came out and said, we're going to kick this off? Well, that's not going to help in the next 5 to 10 years. The average timeline to develop a mine globally is about 16 years. It's probably more like approaching 20 years these days. Even if you have a DFS-ready mega project in the high Andes, it's at least 5 to 10 years to get that project up and running. A lot of people ask about brownfields expansion, and this was a pretty interesting piece that came out of a research group in New York saying that just to maintain production at the top 20 copper mines in the world, they need to spend $50 billion just to maintain production. So there's no real way to use the brownfields expansions to achieve these goals. And in fact, when you look at what's been happening recently, there's probably far more risk in terms of a supply shock. So we have the high-profile examples like Cobre Panama, which was unfortunate, but there are other far more interesting examples for me, which is very much centred around Chile. Chile last year had its lowest copper production, bearing in mind that this is the largest producer of copper in the world, its lowest copper production in a quarter of a century, driven by falling grades and increasing challenges at their mines. So what do we have when we have exponential demand growth meeting inelastic supply? Well, we've seen this story play over and over again, and that is why I'm so excited about the thematic for copper in the next 5 to 10 years. Obviously, it's going to be volatile, but I think the direction is pretty clear if we're going to achieve any of these objectives. So then how do you play this opportunity? Well, the producers are obvious, but the alpha is quickly taken away in those areas. So then you move down into the developer, and that is where the cupboard is bare, and that's where Marimaca is really a unique proposition. We are a small but much lower risk copper project in the low coastal range of the Chilean Cordillera. We are located in the Atacama Desert with no local stakeholders anywhere near our project. So there is no real risk of us impacting any of livelihoods or local stakeholders in terms of towns and villages. We have a very short timeline to first cash flow relative to the vast majority of our peers. And I think from a permitting risk perspective, we're really focused on how do we make sure that we actually get our mine permitted, which we think is one of the biggest risks to any mining project. And really that is about building what we say is the mine of the future. We heard them on the panel prior discuss a little bit about water. Water is, in our view, a fatal flaw. If you don't have access to water in Chile, it's going to be very difficult to build a mine. We will be using recycled seawater in terms of developing our project. We have the ability to have 100% certified renewable electricity as our power. We've got no local landowners, no resettlement, and of course, if you look at the carbon intensity of a SXEW project producing copper cathode relative to the rest of the copper industry, we're significantly lower in terms of our carbon footprint. The second aspect is about risk. And being in the low coastal range of Chile is significantly less risky and significantly lower capital costs than building a mine at the top of the Andes. In terms of our location, we're about 45 minutes north of the Antofagasta International Airport. We're within half an hour of two large centres for employment, but with no local villages or local landowners on our site. What's more important is all of the infrastructure required to build this project is on our doorstep. So we have a port facility in Mejillones, which is one of the biggest import ports for consumables in Chile. We have acid plants, we have explosives manufacturing. Of course, we have the two centres for employment. We will use seawater from the Bay of Mejillones to provide all of the water for our project, and there are power lines running to the north of our project area. So in terms of our ability to execute on this project, it is significantly lower risk than the vast majority of our peers. And that's really played out in the studies that we've done. We are in the process of doing our definitive feasibility study now, which will be done by the end of the year. But our previous studies confirmed that we will be industry leading in terms of upfront capital costs to production. As a result of our very low strip ratio, we expect to be very competitive in terms of operating costs. And when you combine those two aspects, we are at the top of the pile in terms of return on invested capital metrics. We're in the DFS right now, and all else being equal, we would be hoping to be in a position to go to FID towards the end of next year, start of 2026, to be in production in 2027, 2028. And going back to my original comment, the next 5 to 10 years is going to be all important for capturing that cycle. We have probably the preeminent LATAM copper investor in Mitsubishi Corporation as one of our key financing partners. They took a 5% stake last year. Very unusual investment considering the scale of Marimaca compared to their other investments, where they're invested in Escondida, Collahuasi, Quellaveco. But I think a real testament to the quality of technical work that we've done and also the quality of the asset. So as a summary, I'm extremely bullish on copper. I think the next 5 to 10 years is going to play out extremely well for copper producers and copper development hopefuls. We offer deep value in terms of one of the few development stage projects that can get into production in that time frame, and we're significantly lower risk than the vast majority of our peers.